Welcome to State Masters India, your personal property portfolio management company. Usually, real estate is such an asset that everyone wants to own so that it can create a generational wealth for yourself. But real estate in top urban cities like Noida, it offers a whole lot of opportunities. As an investor, it is usually believed that commercial real estate assets gives a better return over a period of time. But these fast growing markets provides a lot of opportunities, hundreds of projects, different kind of asset classes, whether it's office spaces, whether it's retail spaces, whether it's pre-leased, whether it's studio apartments and not. The thing is, as an investor, how you are going to decide that your property asset will be an asset or a liability. So I'm sharing you 12 important checkpoints, checklist that as an investor, you should definitely take care of while taking an investment decision for yourself in any commercial property. Sorry, the first point is location. For a commercial project, any property asset that is there in a commercial project, the first and foremost important thing is location. What exactly is the location? Because location is going to decide what exactly will be the footfall, what kind of footfall will be there, what kind of business opportunities will be there, what kind of offices and retail or the brands would be occupying that particular space, and you can definitely predict a better future with your asset. The second is property type. Since commercial real estate offers a lot of choices, you can invest in lockable spaces for yourself that you are going to manage by yourself. The second option is pre-leased, where a commercial property, whether it's retail or studio or office spaces, they are already leased to different brands. And as an investor, you just acquire that particular properties and the builder lease it out to the brands. Usually these lease are for long term, 9 years onwards, 9 years, 12 years, 15 years. So for during that particular period of time, you just invest into a particular space, acquire that space, and you are eligible for the returns or the ROI that the particular brand is promising as per the agreement. So as an investor, all the asset classes have their own pros and cons. You need to decide what kind of portfolio you are going to add for yourself. Since portfolio कभी एक property का नहीं बनता, portfolio आप बना रहे हैं, तो you would be adding different assets, and as an smart asset, you should try to incorporate different kind of assets into your property portfolio so that it can be well diversified, it can manage the risk, it can meet up the market fluctuations, and as an investor, you can ensure a steady flow of income in short term, good return over a longer period of time. So the most important thing after location is identifying the type of property asset that you are going to own for yourself. The third important factor is market research. Since these particular markets are ever growing, fast growing, and there are different micro markets within the city which are having hundreds of commercial projects coming up. Now, as a smart investor, you need to definitely go deep dive into the market factors, different micro markets, so that you can select a specific micro market, understand the complete stuff, what all are the projects, what kind of footfall will be there, what kind of tenants are there for the office spaces. For instance, if you are considering Noida, Noida has different micro markets. For instance, Central Noida is there, Greater Noida Expressway is there, Noida Extension or Greater Noida West is there, Greater Noida is there, Yamuna Expressway is coming up. So all these particular locations are having different vibes with themselves, different kind of projects, different kind of plannings are there, and accordingly the projects are positioned. So as an investor, you should do a thorough research into all these micro markets so that you can pick a good asset into a good project for yourself that meets your portfolio needs. The next common aspect is understanding the legal compliances. Legal and regulatory compliancing is very much crucial in real estate, since real estate is a long-term investment. Whole lot of funds are there, so you might see a lot of buildings across, but all the buildings are not a good property for yourself. While going on for selecting a particular project, it is always advisable to check the legal compliances, regulatory aspects from RERA, which is now very easy. You can very easily find out from the RERA website that this project has got the approval or not, कब तक उसका RERA valid है, what all are the layout and architecture which is being planned out for that particular project, क्या उसके पास कोई लैंड यूज है कि नहीं है, so that you can be sure about your investment. So it's always suggestible and better to go with all the compliancing stuffs rather than the marketing brochures and the ads that you come across in your WhatsApp, email, or on hoardings. Another important factor for an investor is understanding the financial due diligence. Yes, due diligence is very much required, not for the project, but for yourself also, so that you can better match up and plan your investment. These due diligence includes the price, the expenses, and the potential rental. So these three are the basic stuffs that as an investor you need to figure out so that you can select a good project, good asset for yourself. For instance, if you are planning to invest up to near about up to 1 CR into a commercial property. Now you have the option and you can very easily get a studio apartment. You can invest into a lockable office or retail space for yourself, or you can go on for pre-leased spaces. Understanding this will help you in planning out your investment into a particular asset, like what kind of projects, what kind of assets are giving you what kind of prices. For instance, if you are investing into a ready to move completed project, then definitely you will have to